Just wanted to point out the information we provide today is of a general advice. If you do want some more information, please seek some professional advice.
Welcome to the latest episode of the Retirement Living Your Way podcast, where we have real conversations with Troy Theobald from RFS Advice. Good afternoon, Troy.
How are we doing today, Greg?
We're very well, thank you. It's always a pleasure to sit in the studio. We're at the 4CRB studio with Oliver, recording today's podcast, and we were just having a bit of banter off air, just talking about Troy and spreadsheets. And for those of you that haven't already worked out, there are a couple of things.
Love a good spreadsheet.
You do love a good spreadsheet.
Yeah,
very. Some would say obsessed with a good spreadsheet, but that's okay.
That could be the words you could use. I'd be happy with those. Badge of honour, really.
Exactly. Hey, look, for today's episode, we're getting close to Christmas, so it's only a couple of weeks away now, 2.5 weeks away. So I thought let's just have a bit of a chat about how the year's gone. I've got a thing, Troy, in the hot seat, so I'm going to fire some questions at you. Yeah. But just at a high level, how's the year been?
Oh, it's been good. I'm only kidding, Greg. It has been a good year. But look, in markets, it's been an interesting one because you've seen gold having a record high and Bitcoin at the bottom other end and everything in between. And if you had sat here in January and said that's how the year was going to play out, I don't think a lot of people would have thought that. But I mean, we just recorded one there just around investments and how we, believe money should be managed and all those theories. And they certainly came through this year with our quarterly reweighting. That worked well. We saw start of the year run very strongly. Sold and took some profits. We saw markets sell off. We managed to then buy in at some lower rates. Had a good reweight, trimmed some profit into last quarter, and this one's we'll wait and see when we get the end of January whether we trim profit or not. There, we saw a style of investments that had worked previously not work as well this year. We did replace one of our international managers there. Moved away from an active to another smart beta approach to give more consistency over time. That other approach had worked well in the last two drawdowns, buying companies that are growing with free cash flow unrelated. This time, totally underperformed. It's been large companies, more concentration, more index concentration, more of the bigger companies getting more flows. Smaller companies or companies that are performing very well, getting their share price belted for no real good reason. At some point, that does tend to reverse and common sense comes out, but 2025, lots of active managers will be sitting there scratching their head going, what on earth happened?
Yeah, and look, you see, on average, 15 to 20 clients per week, so you're quite a busy man. Yes. How have clients felt through the year?
Yeah, it's been an interesting one because
there's been a lot of news flow. There's been a lot of noise out there in the markets. How have you sort of found clients?
We did the stats. I just did that monthly wrap this morning live, and a pullback of 5% is not out of the ordinary in years. Pullbacks of over 1%. I think the average is 27 times in a year. We haven't seen that, so we've really only seen a bit of volatility in that April, which was quite a significant pullback through there. And then again, sort of last month, we saw a minor version of a pullback. And, when you've got people jumping at shadows of that, it's like, people have become way too complacent to just expecting every day to log in. I look at my super, I look at my investment, it's just gone up. It just does not work that way.
No.
So that sort of worries you a little throughout a year. People start forgetting history, start chasing what looks good on paper. The All Ords, I think it was only up about 5.5% for the year. That's not a strong return for Australia. So then people start looking at what assets did well. Yeah. Well, then you can find unlisted assets look good, but if they're unlisted, how do they actually do their unit price? How often were they updated? And how are they updated and how independent is the update? So there can be a trap for people falling into a lot of those that start to, holding a lot of unlisted assets or private equity looks sexy, looks good.
Yeah.
But mainly because it's not valued and it's not a true market value that can really cause that sort of disparity between the truth and what they're showing.
And there's been a lot of product on the market with that private
equity,
credit,
wholesale. I've seen all that in 2025. It's just been prevalent.
Yeah,
People
it's amazing.
We don't go near any of that because you have a look at that private equity and all this, and we've had managers and people come, it's great, and they're going to buy this and it's got a 5 to 7 year time frame. until someone wants their money back. And then you ask them, if they're into this private equity, 1 in 5, 1 in 7 investments will fail. It's like, okay, so the others have to make a very big return to make that up. And it's just been more and more, how do we package that up and sell that to retail investors?
What could go wrong?
Yeah, we don't get near it. I can't stand it. And if people want to do it, that's up to them. But that's not something we would be recommending people go near. And, those large institutions that, these private equity groups buy 20 or 30% or 40% of a company. They get in there, they pretty much cut and slash, cut the costs, turn a corporate model, get the profit up.
Yeah.
And they go on and sell that to another private equity group. They take their money and move on, and the 60% holders being the shareholders and everyone else never see any of the return, and we're just watching that over and over the last few years, that playbook that's it's not playing out well for the residual shareholder.
No. You do a bit of work with a number of foundations providing investment advice in that space. Are you sort of seeing those sorts of entities, for want of a better description, looking for that sort of thing? Or
some of them will. Like, we're on a board for a local sporting group here down in our vicinity of where the station is, and that group, we sat down with them, helped them build their charter, build their process, build their philosophy, and the reasons why we don't do it.
Yeah,
certainly weren't dictating, mandating to them. We put ourselves on the committee as non-voting members for a lot of those. So when we go in there, we want to be non-voting. We'll give you our ideas and opinions.
Yes.
Ultimately, it's helping them build the outcome they want. But majority of the time, they're looking for what our clients are, which is a decent return, consistent return. They don't want blow-ups. They don't want to be reporting to their members or committee members about something that's gone bad.
Yeah.
So they'd rather start on that loss aversion than wealth creation first approach. And that, if you stick to that compass, you're going to be pretty well off over time, I think, than getting caught up in the shiny new toy.
Yeah. Well, just in that same sort of vein, let's get to know you a little bit better here. So I've got some interesting questions. So when it comes to investments, what was your first investment you ever made?
First investment would have been I think it was a Dolomite saving account through school, where you had your little savings book and you went in and you got it stamped and you saw that coming through. And then I did start a job down here at West Burleigh at Mather's Shoes in West Burleigh Shopping Centre, and Stockland's there. So as Oliver's looking at me like, really? I went, yeah.
That's why shoes are always so shiny.
That's right. I like the shoes. And back then, it was probably more, buying some of those higher risk style of things, because it's like, when you're small amount, small risk, and if
they're going to go tenfold.
Now, once you're large amounts, downside matters a significant amount, and people should change that accordingly.
Yeah. No, that's good. And what about the best or worst advice you've received when it comes to managing money? Because you would have seen a lot, and you're trained, you're educated, you're professional, you've been doing this for many years. Is there any advice that sort of stands out?
You see, smart people focused on the wrong thing. So I'll pick on medicos and doctors. We've got lots of those, way smarter than I will ever be. A lot of those would come in and argue, and I had one in particular there, and he'd be happy for me to use him as an example for others who knew everything about Campbell's, had a truckload of Campbell's stock. The family's like, he's got too much of this Campbell's stock. They would argue around the Campbell stock. He came in, sat down and said, mate, you know more about this stock than I will know in a lifetime. I don't trust anyone on this planet, let alone a company, to have my life savings.
Yep.
Why would you do that? And he went, no one had asked him that. He was all set to argue about Campbell's. And, mate, you know everything about
you're
the
the expert on that, yep.
I just wouldn't trust any of them with too much. So you can see people, that's their bias of falling in love with what they know in regards to that. The other events you learn, the tech wreck. So I'm old enough to...
Yeah, I was going to ask you,
to have been through that. And that was, back then it was, around the 2000s, where our computer's going to die, were they not going to work, all these sorts of things. And Oliver's going, I don't think I was born back then. Anyway, Greg and I were well and truly into it by then. But if you look at that, and there was the PDSs were physical paper, and you'd have to put your check on there, and you get 5 or 10 grand per listing, and they would literally list, and once they're listed, you could actually, probably send off them. It was quite fax. We're getting to that sort of stage of email then probably, where you could actually sell, and they would list, and on listing day within 3 days, anything doubled or tripled. Didn't matter what the company was doing. It was the promise of all this tech was coming. that I would double or triple it, sell, leave the money that you put in the $5,000, take the profit, and just kept doing that.
Yes.
It was like money for jam for months, and you're going, this is ridiculous.
Yes.
Like the definition of a bubble, that's a bubble.
Yeah.
And eventually the bubble popped, and every single one of those was worth zero. And those that did that approach, that took profit, made a lot of money.
Yep.
Those that didn't and thought they'd had truckloads and quadrupled, they lost a really large amount of money in that one. And the other key learning was the GFC. So we went through that there. And fundamentally, I know you worked in the funds management side, Greg, so I was going to say a few of those people aren't them. Back then they didn't, come to visit the Gold Coast as often as they maybe could have or should have. And all of a sudden, as we're getting towards that, all the property funds and mortgage funds started filling the diaries in there. This was a change in pattern behaviour, change in human behaviour in regards to that. And then knowing some of those, mate, why is this? What's going on? Oh, no, we're just out and about.
Yeah.
And that was sort of the start, even before the GFC started going there, that, these people are, I was going to say fundamentally reasonably lazy-ish, going, why are they coming out and why? So it's always that asking why people are doing things. Why is there a change in behaviour and a pattern in regards to that? And then telling us about how, property funds and, if they just hold them longer, it'll be okay. And mortgage funds, if people default, it'll be such a good thing, and all the extra default interest. And I'm going, default interest? Someone not paying a bill is never good.
No.
I do have an accounting degree, so I will admit I'm wired that way. So people not paying debts is not good. And from our perspective, so we sold all the clients out of the property funds initially, just because we thought, well, property's back the way they are. Yep. They can't sell the properties. You could have a liquidity issue. And then basically got out of bed the next night, went, mortgage funds, they're going to have the same issue, because the whole industry used to use mortgage funds, sold out of those. And then from that perspective, it was probably within a month, all of that sector locked up. So none of our clients had exposure, which was nice. But really, that's a lesson to learn, that the issue was in the structure of the investment. Yeah. And the managers came out a bit like before, talking about their fund and their product and here's the buildings and all those. But if the structure has a problem, you have a problem. And property funds still have that today, where your money goes in with others, it's pooled, they buy shopping centres, buy different properties. And if everyone wanted their money back, you physically just can't have it, because they'd have to sell everything. And that hasn't changed today in that structure. So if you're wanting liquidity and you're wanting to be able to get your money back when you want it, that's not a structure or a strategy we want to touch or be near.
Yep, no, that's fair.
And you learn those lessons for life, because the structure hasn't changed decades later.
No. Is there anything you if you knew now if you knew then what you know now, if you went back, say, 25 years ago, would there be anything you'd do differently on the investment side of things?
Yeah, I should have listened to my wife and bought the house in Broady Waters, not in Eleonora.
Well, I'm glad you got that one in.
I didn't want to move out of my suburbs, so that was expensive.
Yes.
But, bit of a Palm Beach Currumbin local boy at the time, getting me out of my postcode was a bit difficult.
Yeah.
So. And everyone's got those stories with those properties and those.
Oh, absolutely.
And it's probably how the coast has grown.
Yeah.
But you could do the same if you had had the ability back then. You look at some shares you could have bought.
Hindsight's wonderful.
Hindsight's wonderful for those. Look, you can deal with what you've done and the cards you've played, and how do you learn from that and go forward, as opposed to lots of people are anchored on those decisions. So I've done a lot of work around those biases and did an INSEAD program around biases and things that drive people's behaviours and drive their investment behaviours, and that anchoring and past experience and is such a large influence.
Because you're very logical, you're very stable. So did you find that when you did that course, did you personally take much away from it, or it just gave you better insights to how
I left for the coffee mug because I won the day's thing, so I was very happy. It sits on my bench today. So I've learned if you all fundamentally rely on the guru, who's the expert in the room, who's the one, you all die on the island. I don't know if it's my cynical side or questioning side, but it's just asking more questions of what would you do here? Well, how do they know that?
Yes. That does not surprise me one bit with you.
Because I had these people out and they're asking, you're getting marked on your answers and your questions, and you're going, somewhere at the end there's going to be like a reveal, isn't there? Because at the moment it just feels a bit like podcasting back then. It's, and you get put in a room, and why would you ask this, and who would you go, and why would you do this? And fundamentally, people just get into that yes, following herd mentality, and that's where the issue is. So I have that mug on my bench exactly for that reason, for those biases of also just questioning when you prove something, can you prove it another way? If I do a spreadsheet, I'll do a cross-check ad to make sure it comes out the answer. I just don't assume I put the formula in right.
Of course you do.
Because then I know I'm right because I've cross-checked it twice.
Yes. And then similar sort of like with regards to debt, because there's a lot of people that, gear themselves up to the eyeballs.
There's a lot of people making a lot of money out of people taking on a lot of debt.
Yeah, spot on.
So I think that drives a lot of it, unfortunately. So, if you look at how does the mortgage broking industry work, you pay a broker a percentage up front and they get a percentage ongoing on your loan for the life of the loan. Now, that's just how it works.
Yep.
So is that going to potentially influence people's decision? Possibly, possibly not. I don't know, but that's how they're paid.
Yeah.
So, debt has a large amount of banks make money when you owe them money.
Yep.
You don't make money as a household, they make money. So that's, fundamentally you got to look at who's benefiting from some of the advice or some of that level of debt. No doubt if you're getting into a property and you don't have an asset, you don't have the ability, debt's the key to get there.
Yeah.
Paying it down over time, looking at your cash flow, controlling it, paying those things down. We've seen brokers that work with their clients doing that. To me, that's an add value. That's a real service.
Yep.
Because they're sitting there going, well, how do we get you through this? We get that debt down, we get the home loan paid off, and then how are you going to build wealth? Is it going to be some borrowing for some investments? Is it shares? Is it managed funds? Is it another property? Who can we work with to partner to do that? That's a positive outcome of using debt.
Yes.
But there is just so much tied up in the treadmill of people on the debt chain.
Yeah. Oh, and then once they've paid down a little bit, they then go and buy the bigger place. Or
the best ads ever in the history for making money for banks was those Equity Mate ads, and they'd put on a boat, Equity Mate. They didn't tell you to borrow money. They pointed out on the telly, I could have a boat. Every bloke said, I could have a boat. Yeah. I could have a new toy. Yeah. Look at all the shiny things I could buy. I just whack it on the house. People just went and did it.
Yep.
That was very clever human behaviour at its best, worst.
Wet to bed. Exactly.
Yeah. One of those things. I remember clients coming in, bought the car, what you do? Equity, mate. Oh, people were even stating it back in the day.
Yeah, wow.
So it definitely worked.
That's a worry. So what advice, and I've just got a couple of age groups here, just I thought a good way to sort of, finish the year on and just leave some people with some thoughts. What advice would you give someone in their 30s, and only 1 or 2 points, for them to get ahead financially? I know it's hard. I know you can't give specific, but just at a general level, what are the things they should be at least thinking about?
They're probably 30. I could be funny and go, are they actually useful at that age?
No.
they're they can do some stuff. There's a generation below that I'm a little concerned of anyway. But look, from there, it's really for them, it's going to be around that, when do they take that big step of home ownership?
Yep.
It's okay to go backwards when they're having kids. A lot of them get focused and bent up on all these sorts of things. And we will have people come in, and I know Darko and the other partners in the office, he'll have clients come in. He said, I'll get Troy to come in.
Yeah.
And we say that to clients in their 30s, that, you've been so hell-bent on paying your own debt and getting ahead and all this rah-rah. It's okay to get backwards for a while.
Yeah.
Enjoy the kids.
Yep.
So there is that out there from a financial perspective that, certainly they don't have to be quite as, foot on the pedal all the time there. But you've also got to go, this is the time to have a nudge.
Yeah.
So if you don't...
start giving it a crack.
Yeah, if you don't make that bold step and buy that property and actually do that, then nothing's going to happen.
Yep. Okay, what about someone in their 50s? Like, that's a great age.
50's a fantastic age. It's taken me all of 2025 to embrace it.
Yes, but you're there. You're there.
It's taken a while.
What should they be focusing on?
Look, from their perspective, they're sort of that squeezed. And I know one of our friends, what's he called, the money sandwich of the squeezed. I don't mind that as well. But because you've got, we've got teenage and 20-year-old in my instance there. So they're coming out of school, university, costs. They're looking at home ownership going, oh, my God, how do you ever get there? So you've got from that down below, you've got parents above you of that age and thinking they're going retirement villages, home, health, all those sorts of things. So they're dealing with a lot, both sides in regards to that. And from their own perspective, it's just having a good basis of where you're at financially. You need to know. You can't just dawdle anymore. It's game time.
Yep.
So that you've got to get it right once you get to there. And it doesn't have to be focused on that, that just retirement, whatever. But if you've got a broad goal you're working towards and a dollar amount, and you know what it is, and you know what you got to put away, and you're keeping on track, and you're making sure you're there, then you know when you get towards retirement you're okay. And we called it workers optional there because you don't have to retire at 60. It doesn't have to be when someone walks in the door and they sit down, I want to retire at a certain age, I find that very unaspirational. And I do say that's not very aspirational. It's what income do you need, what assets, and how do we get you there? That's aspirational.
Yep.
Because let's not get out of bed every day and do something we hate for a certain period of time until I can be happy. Yeah. Not a lot of fun in that. So people having that ability to articulate, you know what, I think my household spends $60,000 a year. What do I need to do? What's $1 million? Where are we today? When can I retire? Don't know. Where are you today? Let's have a look.
Yeah.
All right, what's the gap? What's the gap mean? If we've got 600 a day, we need $1 million. How do we bridge the gap? Allow for inflation between now and then.
Yep.
Now we've got a target. Then let's build a plan on how you're going to do
Yes.
that. And when you do that, you can decide when you want to retire. You don't have to wait for a birthday because some of us aren't very good at dealing with those.
No, that's correct. Correct.
That'd be me, Oliver.
Yeah.
Very badly dealing with it.
Yeah, no, that's and it's quite scary, isn't it, when you think about people at that point, maybe not even stopping and actually think, okay, where am I today?
Oh,
Which
and that
blows me away, but I guess we live and breathe it, so it's
the constant
a different
question.
world.
People sit down. I'm here to talk about retirement. Where am I at? Okay, if you retire tomorrow, what income would your household need? And I said that I'm saying, really good question. It's not a good question.
Yeah.
It's just the starting point that we've really got to get to some thinking people of what do we actually want to do? What do we need? I'm not living in your house. I got no idea.
Yeah, exactly.
Some will tell me 40, some will tell me 60, and some will sit here and it's 240. Something in between.
Yeah.
And then let's find out the real answer and not the budgeted, made-up answer, and that makes it even more powerful.
Yes.
And most of the time, people that do walk in the door, even though I'm being a little bit glib here, they generally can retire before and on a better income than they ever thought.
Yeah, which is
they just
fantastic.
haven't asked. They've probably been too scared to ask,
That's right.
so they've kept doing what they're doing, and it's probably worked out for a lot of people. We'll call it clever planning, or
Yeah. We'll leave it at that.
or being Australian. Other one. Don't talk about money. Don't talk about those things.
Yeah. No, exactly. And what about those in their 70s?
70s, yeah. Well, we referred to today talking about that, looking in the mirror and that hard conversation. You know, we are getting older in our 70s. And, you know, there'll be people in their 70s, I'm not getting on. We've got to face some facts. There's certain things. If we've got a flat block and we can mow the lawn, awesome. If we're living out the back of Talai and we're on the side of a hill, maybe not so good anymore. Maybe we need some help. So we've got to actually look at where do we live, how do we live, is that sustainable, and is that what I want it to be? And we spoke about this morning, Belinda and I, around that having your choice, because if you don't have your choice in your plan, you'll have it made for you, and you probably really won't be happy then. So it's just planning for some of that sort of lifestyle help and what's needed out there. We've got people in their 70s that are still out there skiing. That's okay. But they're probably living in a unit and are going to the gym and are doing the fitness and strength training and all those things they've identified they need to do to be able to do that outcome that they want. So it's just having that reality check, I suppose. Yeah.
Yep. No, very good. Excellent. Okay, we're going to, in the interest of time, we're going to move on to a couple of rapid-fire questions around, this is all about how you think. So, here we've got the little Christmas tree jingle there going on. So, just a quick decision here.
Quick.
Okay, very quick. Okay, first one. When making decisions, do you lead with data or gut instinct?
Well, it's got to be data because
that's I don't even know why I even asked the question. 2, what matters more, being early or being right?
Well, I want to be on time because I hate to be late.
Yeah, that's true.
But there's no point being early and wrong. So if you take your time and you've actually got it right.
This is meant to be a rapid yes or no.
Well, you're not getting rapid fire because it's a real question. And for that, because you need the correct outcome. So being fast isn't a correct outcome. That's just how quick you can make the correct outcome.
Yep, there you go. Number 3, if you have 10 minutes to solve a big problem, do you start or plan first?
If it's in the financial world, I'm sitting planning. If it's painting my fence, bucket off, I'm into it and creating a mess. So it probably proves I should use the method I use in my business life in
I think
DIY life.
I think so. I can.
Damn.
Number 4, would you rather avoid a loss or chase a gain?
I was going to say yes when you said avoid a loss, so that's absolutely because when you lose the money, you've got to make 100% of that back just to be back square.
Yep.
So if you had 4 things and you lost one, those other 3 have to make all the way back up just to cover that one you lost. Yeah. That's a long way back.
Okay, last one, number 5. If you get conflicting advice, do you ask more questions or make the call yourself?
Well, you have to ask more questions because you got conflicting advice. So
there we go. Ladies and gentlemen, that's in the mind of Troy Theobald from RFS Advice. There are no surprises there.
Aren't there?
No, I've known you for over 20 years, and I tell you what, when I looked at those questions, I thought, well, I know exactly the way Troy's going to go on those. You went on a little bit longer on some than I thought, but I tell you what, the answers are exactly what I expected.
Well, I just want to make sure I diligently answer those for you.
Thank you. No, thank you. So, look, I think that's
Otherwise, I would have been getting, conflicting advice and been possible losses there, and I've been relying on gut instinct, none of which I do.
That's right, spot on. You'd be a fraud. No, well, look, I think that's all we're going to have time for today. So, look, Troy, great way to finish 2025.
Got my little Christmas tree here to jingle.
Exactly. So we're going to get Oliver to put this one up just before Christmas. He's nodding, which is great. Yeah. So look, on behalf of RFS Advice, just like to wish everyone a Merry Christmas and a happy and safe New Year. We've enjoyed doing these podcasts.
We have enjoyed the podcast.
We enjoyed it. I don't know whether anyone's listening.
Commenting at some point, at least have his voice on here. Yeah,
absolutely. So look, until next time, thank you, Troy, and everyone take care.
Thank you, Greg.